Good morning and welcome to the Summit Series for 2023. I hope your year is off to a good start. And once again, thank you for joining us here today. My name is Robyn King. I'm Director of Industry Relations at Payments Canada, and I'll be your host for today's webinar entitled The Future of Modern Payments. And as always, we will start with a roundtable discussion with our panelists, and then we will leave time at the end for audience questions. So please do use the Ask the Speaker button, which I think is on the right-hand side of your screen, and we will get to as many as possible at the end. Now, coming out of another year of transformation in the payments ecosystem, it has become a tradition for us at this time to reflect on that change, but also look forward to what might be in store in the future for us in terms of payments modernization. So with me today, I have got Christine Hunter, Kevin O'Neill, Shawn van Raay, and Damier Xandrine. So let's start with some brief introductions and then we'll dive straight into the questions. Christine, I'll start with you.
Hi everyone, Christine Hunter. I work at TD Bank. TD aspires to be a top 5 North American financial institution, a very well-known brand in particular in Canada. I work within our enterprise payments team, driving out strategy, infrastructural changes, modernization, and I have spent a number of years and continue on the Payments Canada Member Advisory Board, Council, and previously was what's referred to as the MAC chair. So look forward to this discussion with my colleagues.
Thanks, Christine. Damier?
Good morning, everyone. Damier Xandrine, and I am the Chief Legal Officer of KOHO Financial. KOHO is a leading fintech in Canada. We provide digital banking services to consumers in all provinces. KOHO is also a member of the Stakeholder Advisory Council of Payments Canada. Happy to be here with you.
Thanks, Damier. Shawn?
Good morning, everyone. I'm Shawn van Raay. I'm the Chief Information Officer at Payments Canada. As you all well know, Payments Canada is the responsible body for the clearing and settlement infrastructure in Canada. We also manage the rules and standards and bylaws that help support that infrastructure. And in addition to clearing $500 billion a day, we help support and shape the future of payments in Canada. I'm very glad to be here today. Thank you.
Thanks, Shawn. And lastly, Kevin.
Thank you, Robyn. Great to be part of the conversation. My name is Kevin O'Neill, and I lead SWIFT's activities in Canada. Those of you who don't know SWIFT, we're a financial utility across the globe and also in Canada, across all types of transactions that include securities, foreign exchange, trade, and of course, payments. The team works across the Canadian community, covering corporates, financial institutions, and of course, we have a close relationship with Payments Canada to implement our clients' plans and also their external facing activities. Thanks, and look forward to the discussion.
Thanks, Kevin, and thanks, everyone. So I think, 2022 was an enabling year for payments. We saw the foundation being laid for more data-rich payments with ISO 20022 adoption and more awareness around that. We've seen new players enter the payments ecosystem, and I think that's a trend we can expect to continue with increased access to the payment systems. And then, of course, Canada is building its real-time rail, which not only will act as a platform for innovation and increased competition domestically, but will also allow Canada to keep pace with other real-time payment systems globally. But ultimately, modern payments really are about serving the needs of consumers and businesses. And I don't think that really their expectations have changed that much. They still want easier, smarter, and faster payments. So my first question is, how do each of you envision modern payments for 2023? Kevin, I'll start with you for this one.
Thanks, Robyn. So coming out of the pandemic, we've seen how digitization has greatly increased, leading to improvements in customer experience. Globally, for example, today, payments are increasingly instant and frictionless and transparent. So today, nearly 50% of SWIFT GPI transactions are credited to end beneficiaries in 30 minutes or less. Now, in many countries and in many markets, that figure could be counted in seconds where we're crediting to those end beneficiaries, depending on the purpose of the payments. We're also looking at tools and working across the industry to continue to improve on that experience. So for example, payments pre-validation, more instant payment frameworks, SWIFT Go for low value payments, to further improve and accelerate that customer experience. Of course, here in 2023, in just a few short weeks, we'll see global enablement of ISO 20022, allowing for richer data. And that enablement around the world will provide operational benefits, compliance benefits, and then providers will be able to use those richer data sets to improve their customer experiences. We also see growth in embedded processes across securities and trade and payments to reduce friction, as well as interoperability of platforms to be able to pay anywhere, anyone, anywhere, anytime. We also see continued growth in low value. By SWIFT's definition, that's any payment less than 10,000 US dollars or equivalent local currency, growing by some 40% or more across the next few years. That continues to attract fintech, big tech, traditional providers. That's going to continue to drive competition and improve customer experiences. And then, as you noted, secure and compliance is kind of the table stakes of the industry. It's the core foundation that everybody expects. But at the same time, we're starting to see increased trends in things like ESG overlays and integration for the betterment of people and the planet.
Thanks, Kevin. That's great. Shawn, how about what can we expect from Payments Canada for 2023?
Yeah, thanks, Robyn. I think 2023 will continue to be a foundational year for us. There's a lot of work left to do in launching the RTR, and I think that there's a strong commitment across the industry, the regulators in Payments Canada, to make sure that this is the year where we really start to see that foundation come to life. But I think what we're going to start seeing in 23 is really the focus turn from that foundation being laid to the development and ideation of some of the use cases that we'll see domestically on that rail. I think, we can look across other jurisdictions, and we look to the UK, and we look to the work that's done in South Africa and in Australia. And, we see as those faster payment systems come online, the introduction of request to pay initiatives. We see cross-border, and Kevin touched on cross-border a little bit, but I think, what you're going to see in 23 and into 24 is the expectation from our consumers to start seeing that expectation of their domestic payments mirror that on a cross-border payment. And they start to lack that distinction between how a cross-border payment looks versus domestic one. So as we continue to build our real-time rail, I think there's going to be a big pressure to make sure that isn't just a domestic view, but how does that incorporate in a more global perspective? And of course, things that we can look at, some of the work that's been done globally on some of those overlay services. Even Kevin mentioned request to pay is one, but also some of the confirmation of pay, the pre-val, those things, they will continue to be important because they'll be foundational for the use cases that we'll see on the RTR. I think a couple other areas though outside of the RTR that will continue to influence us in 23 will be, we'll keep an eye on CBDCs, central bank digital currencies. I think, we are in Canada, of course, taking a very defensive posture, making sure that we understand what that is. And the government's regulators are being very conscious about and very patient about what that would look like when we're ready to deploy that. I think some of the global pressure and some of the global movements will continue to guide some of that discussion. And I think from an industry point of view, as well as from Payments Canada, it's going to be imperative of us to sort of understand how we will be ready, how we will prepare for, and how we will accommodate those types of that technology as it comes in. And then I think lastly, the other thing will continue to pressure domestic and also global payments initiatives is just open banking. We've seen open banking initiatives in other jurisdictions have varying degrees of success and challenges. And I think we've got an opportunity here in Payments in Canada, and certainly Payments Canada, but largely in our industry, to reflect on and leverage that learning from the other jurisdictions, and understand sort of how we can leverage that for the development of the RTR, but also for other types of information in our ecosystem.
And lastly, Christine.
Yeah, I'll speak to a pretty broad definition of payments from my vantage point. I think the North Star in payments continues to be the experience around the payment. Clearly through the pandemic, we saw a race towards optionality, contactless, and frictionless payments, and just look at the trends in commerce. Pretty phenomenal. all of the activity of competing players across, big tech, wallets, new entrants, really exciting. So I think as we think about 2023 specifically, I think we've got two categories. We've got a category where there's a lot of fast, accelerated innovation, and that's the place where the foundation has been laid. And again, I'd say that for me, what stands out is commerce. In the context of commerce, you see a converging world of physical and virtual, sometimes referred to ambient commerce, right? Where the lines are blurred, the retailers, platform players and financial institutions all playing different roles in terms of exposing and ensuring value to their clients in different ways, whether it's to ensure that the merchandise is successfully purchased or that the trust in the payment is very present. What I get excited about in the context of real time is more the on-demand feature. But laying the foundation, the ubiquitous foundation, I think is critically important to what will ultimately cause probably a 5-10 year ripple effect of innovation. So, a lot of hard work going on in that space and certainly very exciting. So I'll pause there.
It is exciting indeed. And I think year on year gets more and more exciting and complex. So let's dive a little deeper into some of the enablers of modern payments. So, modern payments, obviously, as we've all talked about, must be efficient in all senses of the word. But safety and soundness needs to continue to underpin every transaction. So how do you ensure that your payments innovation is supported by or even balanced by, safety and security on the one side, or even good governance and sustainability? So there's a balance to be found there. And my question is, what approaches are your organizations taking to address this? And also at the same time, how do you create a more iterative environment that fast tracks payments innovation? Damier, how about at KOHO?
So I think I would step back and just take a look at when you're talking about innovation. So what are the principles for innovation? So let's start with, what problem are you solving? You've got to build a product that actually addresses a problem or a need in the market. You also want to make sure that it's being designed with consumer protection in mind and doing an iterative product development, whereby you release a product, you test it with a small population, you get learnings, you fix whatever bugs there are before you then make it more widely available. And I think really what we're talking about is doing responsible innovation. It doesn't have to be where, it takes, years and years before you get a new product out there, because as we've been talking about, consumer expectations have been reset and we want payments to be better, faster. And so you have to develop them, quickly, but yet still with a lens of regulatory compliance and also consumer protections. And I think you do that by really sticking to those core principles around solving an existing problem, having the consumer first in mind for the design, and then also doing it in waves that you can really test and get learnings before you launch and make it more widely available.
Thanks, Damier.
Sure.
Christine, how about at TD? Obviously, being a major financial institution, risk is something you always got to consider with every decision.
Yeah, to add to the prior comments, I do think that it starts with the customer and clarity of vision. So what problem are you trying to solve for? Just repeating that theme for sure is top of mind. Again, what we're trying to do for our customers is to, modernize our thinking, to innovate, to drive value, advice. And I think in behind that, certainly the financial industry and TD is anchored in trust, right? So that's paramount, that leads a lot of our thinking, but we certainly would run the risk of being left behind and are trying to really turn the organization to a model of much more scaled agile. So on the front end, for many, many years, if not decades, you've, heard of minimum viable product and the front end development of online coders really working rapidly to test, learn, and change and improve the client experience. Harder to do when you're going deep into the roots of your organization and you're actually looking at capabilities. So as we think about our capabilities, rooted in data being sort of king in terms of how we can drive advice and value to our clients, we need to be connected to partners and to the ecosystem in a very thoughtful way. And we really need to block our infrastructure, meaning chunk it and block it and make sure that it's very, we're thoughtful in terms of driving agility. We don't know what the future holds. It's a rapidly changing environment. And so the better we can set up our infrastructure to be able to manage, handle change that is accelerating, as we speak, the better off we'll be in terms of our ability to serve our clients. So we're definitely working quite a lot in transforming TD Bank at large into a model of more scaled agile in order to respond and be faster to market.
Yeah, that's great. Actually, as Damier was talking and talking about that kind of starting in small iterations and, learning from those small iterations, scaled agile is what came to mind. So I think you hit the nail on the head there. Kevin, how about you at Swift?
Very similar themes. Can't agree more with what we heard from Damier and Christine. The term responsible innovation is a term we often use at Swift. What problem are you trying to solve for? Perhaps the wrinkle with Swift being a cooperative is what are those common themes across a global community that we can, make available to 12,000 endpoints in 200 countries that people can leverage to reduce that cost and friction, right? And then once you identify what those problems are, innovation sprints, right, early adopters, pilots, and then regroup. And the example I'll give is, it took a while for it to get mass adoption, is around Swift GPI. So Swift GPI started and is track and trace, right? Where's my payments? Why can I track my package? I can't track my $100 million. Well, you can, right? And today, we can track those payments in over 200 countries. But the other thing about tracking is, understanding and revisiting, why are things slowing down, right? It's not always a technology challenge. It might be currency controls. It might be, domestic operating system hours, those types of things. And it might be account name matching, little things, right? And then you go back and revisit and say, what services can we bring to the community that's going to build on that, but in a safe and secure way, right? Now, as you move into more disruptive technologies or newer technologies like interlinking, tokenization, CBDCs, how do you make sure that you don't operate in digital islands? Those are themes near and dear to Swift's heart. And we look at, and I think that ties with some of the themes that both Christine and Damier were talking about, in inclusion, and no one, payment should be in a completely closed loop that you can't get to, right? You have to be able to pay anyone, anywhere in the world. So that responsible innovation approach, safety and security is kind of, going through the entire community, given our governance and cooperative nature.
Thanks, Kevin. Shawn, I think at Payments Canada, our daily bread and butter is balancing innovation with safety and security.
Yeah, and I wouldn't want to be left out of the theme here. Of course, it is, and that is, what problem are you solving? I'll focus really on the safety part of the question, because I think, one of the problems that we're solving, or that we know will become a problem, is the attraction of bad actors to new rails and innovation. We know that as we introduce new rails, we've seen other jurisdictions. We know from experience that as we introduce new capabilities and new innovation, those are just targets, or soft targets for bad actors. And the reality is, fraud is an industry unto itself. I mean, it is an extremely well-funded, profitable, and unregulated industry, and they have a lot of opportunity to be more innovative than us, than the work that we do. When we see there's some really terrifying stats out there, not to be dark and gloomy, but there's notes that there's almost 300 million scams reported in 21 and $55 billion lost. And although those numbers are large, the really scary part of those is that the expectation is that's between 3 and 17% of all of scams reported, and 5% of those are in Canada. So the reality is the under problem in existing scams in other jurisdictions, as well as what we have here, really, really underlies the need for us to focus on safety and soundness of the innovation, but also the rails that we build. And we need to make sure that the tools that we put in place augment the tools that we have at our endpoints, and so that we have a holistic set of capabilities for protection of Canadians across the ecosystem. We want to make sure that we're not that we are agile in our fraud capabilities. We want to make sure that the innovation and the rails and the systems and the rules that we build have the ability to express that agility to respond to the innovation capabilities of the fraud people we are working against. It is, it's interesting. The authorized push pay is clearly the largest scam target right now, and we're seeing in the UK a 40% lift alone in that between 21 and 22. And we need to recognize that is the current soft target, and over time that will change. And so we need to make sure that the tools and stuff we put in have that agility. We have the will and the capability to respond to these changing fraud risks and these changing threats over time. So the same theme as my colleagues here, but it really is important in my mind that we balance that fraud, that protection, that safety and soundness with innovation, but also that we get prepared for the changing landscape.
Thanks, Shawn. So let's talk about something a little happier than that. So amongst the biggest benefits of payments modernization is the data-rich payments, which probably goes back to being more of a target for fraud. But in terms of data-rich payments, how do each of you believe that data will transform payments within your organizations? And maybe if you've got some specific examples or use cases you could share with us. Kevin, I think it's natural to start with Swift.
And, I think I'll look at it from the global industry perspective. I mean, obviously Swift, we're treated as a corporate on our own network. We do use ISO, but, look at it more globally. As we talked about before, ISO is going to help boost strengthen processing. It's going to help with compliance. The addition of structured data will help to, financial institutions to screen better, but also to draw insights to provide those existing services. And a few examples of some of that where that structure could help would be increased straight-through processing, not just at banks, but at corporates and end users. And it doesn't have to be a full, rich ISO message to benefit from that consistent global standard. Some of the obvious examples are things like pay on behalf of, split remittance, partial remittance payments, those types of things that we think these richer data sets will more easily lend themselves to. By 2025, estimates are that 90% of cross-border payments will be based on the ISO standard, and that's across instant payment networks as well as RTGS systems and other domestic payment systems. And so we think that this will, reduce the translation risk for the industry as well, and eventually reduce costs. And then as you start to overlay things like machine learning and artificial intelligence, maybe integrate with technologies like APIs, that's going to provide further opportunities for people to unlock those data sets that we don't even know about today.
That sounds great. Thanks, Kevin. Okay, I will go to Christine next.
Thanks, Robyn. So TD is going to see value in these data-rich payments if we can unleash it for our customers, right? So customer in is where we're going to see value. Tying it to the last question, I think what we have to get right in all of this is we have to get the definition of friction right. I think that's both at an ecosystem level as well as at our individual institutions. There is such a thing as good friction and bad friction, and risk proofing this on a graduated basis. What would you feel comfortable with as a client in pushing through $1 million payment versus a $500 purchase? Mm-hmm. Can be very different in terms of the overhead and screening that comes with one transaction versus another. The other thing that we need to get right is what happens when something goes wrong. Who's stepping up? Who's keeping the customer whole? Does the customer understand? what the expectations are. And I know we've heard a lot of feedback about the complexity of payment options, having all different rules relative to the payment type, and that gets confusing. So we need to keep it as simple as possible and ensure as an ecosystem that we are there for the end consumer and or business. Now, what's exciting, if we could get that right, is the value, again, in providing the insights to our customers. So, on the perhaps, more rudimentary scale, you've got the, the continuing sort of play out of what Kevin had referenced previously with Swift GPI, where, track and trace, visibility, transparency of the payment, perpetuating, for that matter, all of our rails being available to our clients, and expanding on our connectivity, serving up the right data at the right time to our customers. So in the business community, that would mean, integrating into where they do their work to run their business, whether that's, the SAPs of the world or other, software providers, making sure that connectivity from TD Bank into those other providers is there and available for our customers to consume. Another, I think, exciting and interesting example, when you look at real-time payments specifically, is the innovation that would be available on bill pay. So when I think about my many years as a banker at TD Bank, I would say that, advice is paramount, and where better to provide advice, but in financial management, day-to-day activities, nobody wants to pay a bill late. And with all of these increasing options of payment types and services that we have, whether they're subscriptions or your monthly utility bills and so on and so forth, there's a really amazing opportunity to transform bill payment with more data, more insights, and more value to our customers. All of this, again, plays out over years to come, but really exciting, and I just want to get there as much as the next group. We're working hard to bring all of this to life. Thanks, Robyn.
And we are getting there. We are getting there. We've got ASO on links coming this year, and the real-time rail will be built on ASO. So we will get there. Shawn, maybe you can talk a little bit more about that and how it'll impact us.
Yeah, and I'll try to be a little bit cheerier than my last comment, not to be so downer. But I'd like to really extend on some of the themes that Christine played, because, I think as we've specifically on the RTR space, we've really been focusing on, what innovations and what capabilities that rail will provide based on its speed, right? Based on the protection of that happens. And I think that those are important. Of course, that is a massive driver that will change a lot of the type of work we do and the type of innovation we do around just-in-time payments and things of that nature. But I think where the next level of innovation and where the real opportunity to embed this into Canadians' day-to-day lives is when we can start leveraging those real-time and fast payment systems with some serious rich data. And Christine had a great example around, bill payments, but, talking about request to pay, the ability for a consumer to receive a request to pay and understand the contents and the detail behind that request, and clear up the ambiguity that potentially might exist for them. And then not only that, when they respond back to that requester, have the ability to communicate within that payment infrastructure, within that ecosystem, to say, here's the partial payments and some of the capabilities Christina talked about. And I think one of the other themes, when we look at how data might transform, their ISO might transform some of the work we do, is, we look at, I think many of us probably here today are really familiar and have heard the use cases that Kevin talked about for a long time. We've been very embedded in the ISO work and MX work and the wires. And I think that's, we're all very excited about those opportunities. I think the really interesting part is, how some of those opportunities might turn into, more consumer-based opportunities. And so, we think about, automated, reconciliations, and we think about just-in-time cash management and those things. And those are very commercial types themes. But if we think about, consumers individually, and they start to work more in a gig economy, and they start to see their pay coming on a day-to-day basis, potentially, understanding the composition of that pay, from the service industry, and I know that I'm getting certain percentage of my pay based on salary and tips and so forth. that information is valuable. And if the confidence of when I'm getting that, and I can start to manage my personal finances much in the same way that you see the management of the commercial opportunities, I think that's really a fascinating trend. I think there's an opportunity there from innovation, and that innovation, certainly speed facilitates it all day. But at the end of the day, that only takes you so far. It's really that the data behind it that gives insight and confidence into that payment that really just doesn't come from anywhere else other than through the fact that the data traverses with that payment. So I think I'm with Chris. I think that this is the thing that really gets folks excited. I think it's the innovation here is going to be fascinating.
Absolutely. And Damier, what would increased data mean for KOHO clients?
Thanks, Robyn. So I would say for KOHO, one of our core missions is to really help improve and enhance the financial lives of our customers, Canadian consumers. And I think with giving consumers more data, more access to their data, that helps them really understand their spending habits, like what they're buying, how much they're, spending on things, and really how that can impact their financial goals. And I think that, to use data to really help with financial literacy is a very compelling use case, especially for KOHO customers. I would also just add that there's a little bit of tension, because while, you have greater data that's going to happen with more innovation, you want to provide that data, you also have to balance that with the ever growing concerns around privacy. And, there's Quebec is a great example. They have a new privacy law. It went into effect in, I think, September 2022. Another phase of it is going to be implemented later this year. And that's a pioneering framework, which is really pushing for privacy by design and being very protective of how you use and collect consumer data and the purposes by which you are using that data. And I think that principle around privacy and a lot of the privacy laws that we're seeing is going to impact, the rest of Canada. We're seeing a consultation now on PPADA and if that should even be more robust. So I feel like we really need to balance, how we are using data with the responsibility for that use. I think it's going to be really interesting. The more data you have in your systems, the more you need to map it and assess it and understand how it's being used. Sometimes, you can see what a consumer is doing and use that data to provide them with more products or services, or really, as I said at the beginning of my comments, just help them to take more ownership and education of their financial lives and the goals that they're trying to hit. But again, what is it? To whom much has been given, much is expected. So it's kind of like you have to really take that responsibility for the data that you have.
Absolutely. Thanks for that perspective, Damier. According to the latest Canadian Payments Methods and Trends report that we released last year, we've seen contactless payments and digital payments continue to be popular amongst Canadians, even as we emerged from COVID. And we also saw the natural increase in e-commerce sales continue, and now increase in use and interest in alternative payment methods such as digital currencies. So what payment method do each of you think would have the biggest impact on your organization in the coming year? Christine, maybe we'll start with TD.
Sure. So I think the addiction that Canadians have to loyalty is not going away, right? So we do have a society fairly anchored in credit cards and associated loyalty programs and loyalty programs beyond cards. So I think that prevails. The definition of loyalty programs has changed dramatically over the last number of years, much more integrated into merchants than ever before. And a much more competitive dynamic than ever before in terms of everybody wanting kind of their own definition of a loyalty program. The options continue to expand, and at what point might we reach some sort of saturation or confusion in the market I don't think we're there yet, but I think absolutely we are very inspired to ensure that we're providing options to our customers, which includes an increasing mix of account-based payments at point of sale, probably more debit on the horizon than credit. But if I think of the theme underneath all of this, and I think of what consumes us as employees of TD Bank in the payment space these days, I'd still say that it's still the come through for our customers on the theme of trust. With all of this change happening and all of the infrastructure uplift that's going on, we need to get it right. And so there are, significant dollars and, thoughts and certainly controls being put in place to ensure that we get it right and that we're there for our customers. I certainly don't want to end this call on any sort of doom and gloom in terms of it being a recessionary year, but I'll bring it up. With everything that's going on with the economy, I think that we know that we have sort of a different post-pandemic population in terms of the strain on mental health and things like that. And then we, in front of us, we hear a fair bit of doom and gloom around the economic outlook. So I think the pervasive theme and certainly the here and now is that we need to continue to be there for our customers. We can't mess this up. We've got to get through all of these changes with trust there. The old definition of trust would be that, you walk into the branch and the bank keeps your stuff all locked up, safe and secure. The current definition and emerging definition of trust is that we're providing customers with connectivity to their everyday lives. And that's a very different phenomenon. Shawn had touched on open banking. Damier, referred to the privacy considerations. There's a new, very much more connected definition of trust that we aspire to ensure that we're seeing through with purpose. So I think that captures it from my perspective, and I'm interested to hear what others have to add. Thanks, Robyn.
Thanks, Christine. Kevin, how about you?
So I think there's not a single payment type. I think that will kind of leap to the fore. I think one of the things about payments is nothing ever goes away. And you always need to support and interoperate with many different types of payments, be they old, be they new, be they CBDC, open banking APIs. You have to support all of them, and you need to support all of them in a rich and robust way. Christine talked about what happens when something goes wrong. It's always easy to talk about the happy path, but you also have to be able to be ready for worst case scenarios. And I think the industry has done a lot for that. In 2023, I think the biggest thing that we'll see, and it's hard to say here 6 weeks away from the ISO general go live and not talk about ISO being a major kind of watershed event in the global industry. You'll have Europe, you'll have all of the cross-border space kind of mass adopting. Obviously, Links phase 2 here in Canada is a significant milestone, and it's the start of a journey, right? So, it's a 3-year coexistence period for the SWIFT community that will continue to learn and grow on. Beyond that, driving adoption of tools, payment pre-validation, SWIFT Go, and making them more widely available to reduce those frictions and to streamline payments. I like what Christine said earlier, not every payment has to be instant. You have to be prepared to support instant, but if you're under attack and all the things that Shawn talked about from a fraud perspective, you may want to slow things down a little bit if you're a large corporate and you feel you're under that type of attack, right? So that payment certainty, I think, regardless of the type of payment, you want to know when, you want to know how much it's going to cost, and there are other characteristics that will be important to you, making sure that you're connected to be able to pay anyone, right? It's not a technology challenge, it's a regulatory and compliance challenge. And I think that's regardless of the type of payment. And the last thing I'll say is here in 2023, it's definitely already been a journey. Over the last several years, the industry has really raised the bar on security, on payment tracking, and now richer data as we move forward. So looking forward to great things in the community 2023 and beyond.
Absolutely. Thanks, Kevin. Damier, what do you think the trends will be that affect you this year?
So, I've been thinking about that, Robyn, and Christine mentioned, how we've seen a lot, over the years of just an increase of card payments. And it's true, it's really easy, if you want to purchase something, whether in person or online, you can use a physical or virtual debit or credit card. But every time that card payment occurs, the merchant is paying a cost for that interchange. And I think we've seen recently that due to the increase in interchange cost, some merchants are passing along, a surcharge or an extra fee to accept credit card payments. And I think to start to reduce the cost to merchants for interchange, I think that we're seeing, and it's just starting to take off, more innovation around being able to accept a different type of payment at the point of sale. And so whether that is a direct debit at the point of sale or having the ability to directly link a bank account stored in a digital wallet, we are seeing, use cases of companies really trying to innovate to be able to accept a digital-based payment, I should say a digital account-based payment at the point of sale as a way for merchants to reduce their interchange cost. So I'm not at all saying that we're going to see, a reduction in, card usage, but I have seen, more companies try to figure this out because there's been such a big outcry from merchants recently around interchange.
Yeah, big topic for this year for sure.
Yes.
And then Shawn, what do we think are the big things for us this year?
Yeah, thanks, Robyn. And I think, kind of going on the points of Damier before is, we are seeing in the trends in the trends report that we had, we're seeing an 18% year-over-year contactless payment usage increase. We're seeing 50% of Canadians using e-commerce platforms. We're seeing, an enormous shift in the behavior of Canadians persisting beyond the pandemic. So we're seeing the fact is that, where consumers may not have been as comfortable pre-pandemic to do certain types of transactions, whether those are online, whether those are contactless, we're seeing that those trends were accelerated by the pandemic, and those continue to persist. So there's not any sort of reversion back to the previous model. And I think what that also tells us is that, we're going to see a continued increased adoption of newer technologies. And we see, a quarter of Canadians willing to do QR responsible, make payments through QR codes. They're a large majority would be comfortable using fingerprint, facial, voice recognition. So we're seeing a trend to an openness and a willingness to really adopt innovation in a variety of forms. And I think that's really going to continue to increase and open a lot of doors for consumers and for members to build out some fascinating things. I think, when we look at that, we have to be conscious of, as those continue, and not to be doom and gloom again, but as those continue to arrive, we have to be conscious of the threats that come along with those and the risks that come along with those. And those include, of course, fraud and things of that nature, but they also include making sure that, we take the time to make sure the right rules and the safety and soundness and, the right revocation, like the right recourse for consumers exist, and they have those protections that they've historically trusted on things like bill pay, on pads and things of those nature. So, it's this balance between making sure that, we continue to support and really promote the innovation and respond to the needs of the consumers and the needs of Canadians, with making sure that we don't forget the foundation of the safety and soundness of what we're building. And so I think, again, there's a phenomenal opportunity there for that innovation to continue. And I think that innovation will only be successful with the confidence of the consumers. And I think it's incumbent upon all of us to keep that confidence in mind.
Thanks, Shawn. So that actually brings us to the end of our official questions. So we can actually go to audience questions now. We do have a record size audience today, so a lot of questions coming through. So apologies if we don't get to yours. We have also looked to group some questions because some themes are definitely coming through. So the first one is about when we're talking a future of payments, we would be remiss in not talking about let's call it cryptocurrency / digital currency and the underlying technology of DLT. So we'd just be interested to hear some of the panelists' thoughts on this technology and how we may see it evolve over the next year or longer. Damier?
Sure. So it's really, really interesting because I remember when Bitcoin first came out, and that's been, gosh, almost 15 years ago. And so going back to how we were talking about innovation, what is the problem that we're solving? So is cryptocurrency really a means of exchange to help with payments? I think that's how it first started. And then it quickly pivoted to becoming this sort of investment vehicle. So trying to figure out the asset class for crypto and then the use case. And then we've seen a spectacular implosion of it lately. So I really think that there is likely some problem to be solved with the use of a digital currency, and it may help with maybe cross-border payments. But I feel like at the moment, at least, because it has existed in an unregulated space or quasi-regulated space for so long, and sort of the rails have started to come off, that if anything, has slowed down our ability to make, I would say, more ubiquitous use of crypto, because regulators and governments, and I think even investors, are going to be a lot more hesitant around making the use of crypto. So, I honestly think that it's going to be a while before we see a ubiquitous use of crypto assets. Also, I think another issue with crypto is that because it is not sort of widely accepted, when you hold that type of asset, to make it liquid in a manner that can be used, there's a lot of time and complexity that can go into that. Like if you're holding some type of digital asset and then actually being able to make it liquid in a way that you can really use it. So I honestly don't see an immediate use case for it, at least on a global scale.
Thanks, Damier. I appreciate the thoughts there. Shawn, did you want to add something?
Yeah, I would echo one. I think Damier's points are all valid and make sense. I think the other thing to consider with this is the social confidence in the architecture and the technology, right? And I think that ebbs and flows, and we see an enormous amount of confidence with FTX, and then we see an enormous lack of confidence with that. And I think that one of the things we've got to find before it becomes mainstream, before it becomes something that is beyond, and I agree with Damier, before it becomes something beyond beyond an investment tool, become part of our day-to-day lives, we've got to have confidence in the actual technology and in its role in our ecosystem. And I think that's a bit longer than the tail where we had predicted, and that's maybe a consequence of some of the rise and fall of the different types of technologies and the different players involved in those. So I would agree that right now it's a very strong investment focus. Its day-to-day usage still kind of eludes the here and now.
Hey, Robyn, if I could jump in, it's Christine. I wanted to point back, actually, sorry, Kevin. I wanted to point back to something Kevin said earlier. I think we often conflate themes. We've got DLT here and crypto. And so I think Damier, hit a whole bunch of categories that I would have called out: investment versus, money move. But Kevin earlier in the conversation, and Kevin, I'll then hand it right back over to you as you were about to jump in as well. There's a difference in terms of, what technology can do and what business models we actually want to have in place, or, not that we as corporations want to have in place, but there is demand for in the market because of true customer problems. And I think that in the case of crypto specifically, we have seen a lot more activity that's in the speculative category than anything else. And there's big questions obviously looming. I think that you will see, and as we study it and think about CBDC and digital currency at large on the money move side, even just the advances in terms of payments modernization, that kind of meets the 90% of the money move needs. I think there's remains opportunities for DLT technologies for sure at large, but very different questions when you look at the business versus technology side of this. Kevin, over to you.
Thanks, Christine. Exactly agree, and also with the points made by my other panelists. I draw a distinction perhaps between CBDC and crypto, regulated, digital assets versus unregulated. Not all CBDCs have to be DLT either. There are non-DLT CBDCs out there. And, earlier I referred to the fact that, we've done some sandbox work to talk across different DLTs and CBD sandboxes. So you don't want to end up on this digital island where, you can't get to your money or your money can't move anywhere it needs to in the world. So, a lot to happen in this space. But it comes back to, the problems you're trying to solve for. I think the banking industry gets a little bit of a bum rap because you can have a 10-second response time today using existing technologies. So it comes back to that, what problem are you trying to solve for?
Mm-hmm. Thanks, Kevin. So the next question I've got is for you, Damier, and I'll actually then pass it over to Christine, is how do neobanks like KOHO, if you consider yourself a neobank or a fintech, how do you differentiate yourself as a kind of competitor, new entrant versus a partner with the incumbents in the industry?
So KOHO is a financial technology company. We provide digital banking services. We're not a bank. And what I would say is in addition to being the first direct, I think we are the first or one of a very few direct issuers with MasterCard as a fintech. That is one way that we differentiate ourselves because it reduces our need to rely on a partner to be able to issue a prepaid card. We also provide lending services, and that is not done in connection with a partner. So we provide access to a line of credit along with financial coaching. We provide consumers with access to their credit scores. So, going back to a comment that I made earlier, one of our core missions is to really enhance the financial lives of Canadian consumers. And so we see that, being done through giving very seamless access to their accounts through a great user interface, having access to lending services as well as money movement and card issuance.
Christine, anything to add as an incumbent?
Sure. So we are a financial services institution and certainly looking to innovate. We've been big supporters in the retail payments oversight framework and the RPAA, right, in terms of just setting the stage for a common risk-based approach to payments. We believe that TD is going to succeed with and is inspired by having more competition in the market. So, competition is a good thing for all of us. It advances our economies and, our everyday lives. So I call out the regulatory framework in this context a little bit, just kind of going back to the last question. When we think about crypto, we've been very cautious in thinking through the fact that we're missing the market, right? Like crypto has been a huge source of investment for Canadians at large, and we have not actively participated in it. And so as we think about, the repercussions, what could happen if and when, and things like that, it's nice to know that there could be a common regulatory framework that that folks are operating within in the context of payments. With that opening up, I mean, I think that we have lots of exciting new and different opportunities as the incumbent. And I would say we haven't figured it all out, right? It's ever changing. But certainly if we get the infrastructure right and the mindset of partnership and being where the customer wants us to be, I think we can, you know, see some real changes in the market from here.
Thanks, Christine. And then I think just time for one last question. So we'll just have to make it a quick one before we wrap up. So it would be great to have a high-level viewpoint from Payments Canada with respect to open banking. And what are we thinking with regards to first step that may be useful to Canada, and maybe just a little bit in terms of how what our involvement is there. Shawn, so I'll kick it over to you.
Sure, and with just a couple minutes left, I'll keep the answer short, but happy to have this conversation with anyone because it's fascinating. I think, you know, for us, you know, there's a lot of work in the regulatory body and the government around what open banking regulations will exist and legislation will exist in Canada. I think for us, you know, one of the important things that we do at Payments Canada is we really work closely with our partners globally to understand how open banking initiatives in their jurisdictions have impacted their environments and their ecosystems. And some of the things, you know, we look at, of course, data sharing and access to consumer data. Those things are important, but really the adoption of things like payment initiation and the ability for billers and so forth to begin to initiate payments outside of the traditional models. I think that there's a very strong opportunity for us to understand how those types of elements of open banking will influence the innovation on real-time rail and other types of rails. And I think the biggest piece, again, I'll come back to the same theme I have, is how do we make sure that the rules and the structure and the infrastructure we have to support and protect Canadians adopts for that. So there's one thing around the technology being available and the legislation saying these things have to be open and it has to exist. In my view, and I think for us, you know, understanding how do we make sure that Canadians continue to have confidence are protected in light of these new innovations, in light of these capabilities. And are we keeping up to date, and are we agile and fast enough to make sure that we can respond to these changes in a timely manner, and we're not taking, you know, too much time to do that. So I think those are some important themes for us as we explore open banking.
Thanks for that, Shawn. And that is unfortunately all we have time for today. So I just want to thank all my panelists for joining us today. It's been a great conversation to start the year off and to kick the summit series off with. And we are looking forward to seeing everyone and continuing the conversation at the summit in person this year. We're back in person in Toronto at the Beanfield Centre. The summit will be from the 3rd till the 5th of May. So you can visit thesummit.ca to register for your ticket. And we look forward to seeing you there. Until then, have a great rest of your day. Stay warm, and thanks for joining us.